What's up, my people? Hey, I'm going live. Thank you guys for tuning in. So today, or this evening, I should say, I'm gonna be talking about what banks do with your funds or with your money that you deposit at the bank, right? So to begin, what do the banks do? Well, to start off, I want to get you guys an educational background first before I jump into why they do what they do and how it's not to your benefit, right? So the first concept I'm going to be sharing is a concept called the Rule of 72. So this concept is very important to understand because you'll see how it's to your detriment and what the banks are doing and why they are the biggest buildings in the US. So the Rule of 72 is basically how interest rate works. Whatever interest rate you have, you divide that into 72 and it tells you how long your money takes to double, or how long or how fast your debt will double. So in essence, 1 into 72, 72, 6 into 72 is 12, 10 into 72, so on and so forth, right? Whatever interest rate you have, you divide it into 72 and it tells you how long your money will double, or in essence, your debt will double. So in this instance, let's say you deposit $1,000 in the bank, right? The bank, by law, they cannot lend out the full $1,000. They have to keep something on reserve. So in the United States, the reserve amount that they have to keep is 10%. So what that's going to do is bring you down to $900. So 900 is what the banks can lend out. Now, keep in mind the Rule of 72 because here's where that's going to come in play. Now, while you're saving money at the bank, they're only giving you maybe 1% in your savings account. In a CD, maybe 3%. That means if they're giving you 3% in a CD, that means in 24 years, whatever money you're saving in that account, whether it be 5,000, 10,000, that money, it will double in 24 years. If you're only getting 1% in a savings account, that means it's only going to give you 72 years for your money to double. Who wants to wait around that long? Do you have that much time to wait around to see your money double? So if you have 10 grand at the bank, that means in 72 years, if you're getting 1%, that means 72 years is going to go to 20,000. You don't want to wait around that long. So here's where the bank makes the most money at, and here's why the banks are the biggest building in each city you go in, or credit unions for instance. When you deposit that $1,000 at the bank, right, by law they have to keep a percentage of that on reserve. They have to keep 10% on reserves. So 900 is what the banks lend out. Now, let's just take, for instance, simple math. Let's just say these individuals, $900 goes to 10 people, right? That 10 people equals $9,000 that the bank has now lent out because you're just one individual. So, in essence, 9 and 10 people are going to come to the bank and deposit $1,000. The bank will lend out $900 for each of those individuals that come to the bank. Total sum of $9,000. Now, when these individuals go to the bank, for instance, what's going to happen is this. The bank is now going to take that $900 and they're going to lend it out in the form of maybe a mortgage loan, an auto loan, a personal loan, a credit card. They're going to charge these individuals a higher percentage interest rate. Could be sometimes 7, could be sometimes 10, could be 18, could be 24, could be 28, could be 30, depending on those individual credit score. So now, keep in mind these individuals and the Rule of 72, they're playing against those individuals that are borrowing the money. So when these individuals, let's just take in point, a person that goes to the bank and say, hey, I need a credit card. And they say, I want to take out $1,000. What's going to happen is, let's say their credit card is fairly good and the banks give them an interest rate of 12%. That 12 and the 72, that means every 6 years, if you've never paid that full amount of $1,000 off, if you spent it out, shopping spree, vacation, and you maxed out the $1,000, and in 6 years, if you don't pay it off, it's going to double to $2,000. Did you know that the average credit card balance in the United States is over $16,000? Now, think about the Rule of 72 that's playing against these individuals with the high interest rates. So now you're saving money at the bank and you're only getting 1% in interest while you're saving your money there. But on the flip side, they're taking your own dollars and lending it right back to you, your friends, your cousin, your mama, your uncle, your daddy, and charging those guys 12%, 18, 17%. I've seen auto loans anywhere from 7 to 10%, sometimes 4 on a good credit score. So this concept is very important for you to understand why it's not so good for you to save money at the bank, because when you do save money there, the bank is taking your money and lending it, and they're making a killing because they're charging those individuals that are borrowing the money a higher percentage interest. So if you ever want to try to build some type of financial well-being, or for you to become financially successful, you have to turn your money to the offense. You have to figure out a way where you can get high interest rates while minimizing the impact of loss and also minimizing the impact of taxes. And there are strategies out there to where you can actually double your money while keeping it safe, just like you're keeping it safe at the bank. In most instances, you can do that between 7 to 10 years, rather than only getting 1% and doubling your money every 72 years, or if you have a CD every 24 years. So this is what I want to share with you guys. If you guys have any questions you'd like to learn more, please feel free to DM me and we'll sit down and go over some more information with you. So that way you can be more educated on where you're putting your dollars at, because at the end of the day, you need your dollars working just as harder, if not harder for you, just like you're going to work and working hard every day. So again, this is Javed Morgan, Mr. Wall Street to Main Street, coming to you live, bringing Wall Street concept to mainstream America. Y'all be blessed.